Welcome back to Morning Markets on Monday, the 19th of June. Two important data points to discuss this morning: European inflation and the health of US consumer sentiment. Stay tuned for more information. On Friday's Morning Markets, we discussed the interest rate decision from the European Central Bank. The decision was to raise interest rates by 0.25% to 3.5%. This was the 8th consecutive hike and marked the fastest interest rate hiking cycle on the bank's record. This was in response to the inflation challenge which they have to address. On Friday afternoon, we received inflation data from Europe which demonstrated the point we've been discussing here for a number of months on Morning Markets. A disinflationary trend of headline inflation continues. What does this mean? Well, inflation at a headline level fell from 7% to 6.1% to the end of May, with energy prices falling 1.8% and also a fall in the cost of pressures on food and services. For context, the peak of headline inflation in the summer of last year was 10.6%, so we're seeing a downward trend in terms of headline inflation. If we strip out food and energy prices, which are the more volatile seasonal components of the index, it's demonstrating the challenge which was addressed by the European Central Bank, that core inflation remains in an upward pressure environment. So core inflation ticked down to 5.3%, but that was only modest, a modest reduction from 5.6% the previous month. And if we look on a month-on-month basis, actually ticked up 0.2%. So all of those readings sit above the central bank target of 2% at this point in time. So talking to the point which Christine Lagarde, who's the president of the European Central Bank, was making, that more work may be required, hence the expectation of potentially another interest rate hike from Europe in July. In terms of labour markets, wages grew 5% year on year. Now that's actually cooling down slightly from 5.6% in the previous month. This cooling should be positive for companies in terms of the pressure which they face from wage growth, but we are expecting wage growth to remain an upward pressure on the inflation basket overall, given the low levels of unemployment which you're seeing in Europe and the high levels of demand for workers at this point in time. If we move across to the US, we had the US consumer sentiment data. Consumer sentiment in the US is really important because consumer spending makes up around 60% of GDP, so having an understanding of their confidence is an important aspect. If we look at the reading, it was the highest it's been in 4 months. It's higher than the analysts' expectations, and this is encouraging for the economy overall. To give you the data behind that is compiled by the University of Michigan. The index was at 63.9 and it increased from 59.2 last month. So in summary, headline inflation continues to fall in Europe, core inflation remains sticky, and the consumers are more optimistic in the States than they've been in the last 4 months. Thank you for watching.